What if the US actually defaults on the debt? In 2013, the Federal Reserve themselves did a study on this. What if a temporary default occurs for just 1 month? What would happen to the US economy? Well, it won't be pretty. There would be financial devastation if a default lasted for just 30 calendar days. Treasury yields would fly up by 80 basis points. Corporate borrowing costs will explode by over 2%. In addition, stock prices will collapse by 30%. The US dollar will also drop by 10%, and that would translate to higher import costs for the US. Everything in Walmart and Dollar General would fly up. Industrial inputs would get more expensive. The sticker price on cars will increase. US consumers would get clobbered hard. In no situation can the US Treasury allow a default to happen. Yellen, Powell, or whoever next, they'll have to inflate the debt away. There can be no other alternatives. So in 2025, the debt issuance will have to go up. Now, I don't believe for a second, for a moment, that Trump would allow a default under his regime. So the next 4 years, they're still going to be inflationary. The markets are starting to price in this reality. They know the US has a spending problem, and investors, they are demanding a higher return. Even as Powell cuts rates down on the short end, bond investors are revolting. Yes, Fed funds in blue, they are now under 4.5%. But how is that a win? The 10-year has flown up to 4.6%. The yield curve has uninverted, which means this could be the normal state of affairs going forward. Long-term borrowing costs are rising, and we could very well see a 5% handle next year. And that would be a shock for the markets. And when we analyze interest rates and the US economy, it's more important to look at the 10-year. That is the benchmark to which almost every other borrowing cost they are pegged to. Mortgage rates, credit card rates, and personal loans. If the 10-year goes up, this makes living in the US much more expensive. Now focus on the yield curve in red here. It shows the latest update last Friday. Compared to September, yields for the 2-year all the way to the 30-year bonds, they have flown up, some by over 100 basis points. The 30-year borrowing cost itself is dangerously near 5%, and this opens up a whole can of worms for the US economy. Trump has to reduce spending to drive yields down. The higher they go, the entire plumbing of the financial system starts to get undone. But Trump has sandwiched himself into a global tariff war. The mission of his administration is simple: bring back US manufacturing at any cost.
Vote for Trump and you will see a mass exodus of manufacturing from China to Pennsylvania, from Korea to North Carolina, from Germany to right here in Georgia. They're going to come to Georgia from Germany and lots of other places.
Trump has made it crystal clear that US manufacturing is going to return, and you can count on that happening. But just like Thanos snapping his fingers, the key question is at what cost? Because there will be a tremendous cost of driving the debt higher, and not talking about it would be disingenuous. And here's what Trump's reshoring sounds to the world. Trump wants to borrow money from the world to force companies to reshore to the US. By funding the US government in 2025, the global economy, they are funding their own deindustrialization. Sooner or later, countries including the G7 will realize this. Now, since 2015, a dangerous trend has been starting. Despite the dollar being the reserve currency, countries around the world, they are holding fewer and fewer US bonds. We are witnessing a repatriation of global assets from the US to other stores of value, and this will only continue. US bonds by foreign central banks have dropped from 35% of total debt holdings to nearly 20%. It's a big decrease. During the same period, gold holdings as a percentage of currency reserves have increased from 12% to nearly 20%. And if Trump continues to threaten the world if more sanctions happen, it won't be a surprise if this number goes higher. We could very well hit back to the 1990 levels where gold was 30% of total currency reserves. And these are all the big macro effects of the last decade. We already have currency debasement and asset confiscation. Now, if you add in a trade war into the mix, countries would be less willing to keep funding Washington like before. And this would of course result in higher borrowing costs at least for the next few years. And let's talk a bit about the US equity markets because the higher rates go, it slows down the pace of economic growth. Now the S&P is up by over 25%, fantastic, hitting 6,000 before retracing back. Now that's incredible, but it's not because earnings have gone up. In fact, it's more or less flat. It does suggest that valuations are out of whack, which poses a big risk to US stocks. If this fairy tale narrative suddenly flips, the potential crash could look really ugly. As we speak, US equities are 3 standard deviations higher than global stocks. This has never happened before in history. It's higher than the Nifty 50 bubble in the late 1960s. Valuations today are even crazier than the dot-com bubble just before the collapse. Money has been leaving global stocks for the US over the last 20 years. And can this continue? Sure it could, but it can't continue forever, or the US market, the US stocks, will comprise 100% of the world market. It's mathematically impossible. The higher yields go on a 10-year, the greater the chance of a sell-off. We could really have a retracement back down to earth. And what could directly affect bond yields in the US? Well, the amount of borrowing, plus the coming trade war. Now, if Trump does something radical like a global 25% tariff, then we could see panic in the bond markets. But beyond this sudden puke, the picture is going to be inflationary long term. The US debt would still continue to climb. There's just no way to cut spending anymore. It's the combination of higher rates and uncontrolled deficits that's going to push us off a cliff. The interest expense on the debt is slated to be 4.1% of GDP by 2024. And this is only sustainable if, and this is going to be a big if Trump can raise economic growth enough. But if he can't, the US economy would grind closer and closer towards eventual default. And a lot will be outside his control. How will the world respond to his trade tariffs? Will China counter and launch its own economic war? We just don't know yet.